MV3 Traders Futures Trade Radio is brought to you by The Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, what's going on? What's going on? How we doing? Hope everybody had a good weekend. Go ahead and throw that pre-market awareness up. If I can find it, there we go. Nothing like on the economic calendar for today. Actually have a light week in terms of like economic events. But for today's session, we do have, a lot of volume. Opening a wide. Had some volatility at the session open last night, giving us a wide neutral zone spread. So it'll be interesting to see how the day turns out. I'm seeing good mechanical action from both sides. Very mechanical to my power range levels. And before we get started in today's session, I want to go ahead and say, if you're anybody that's interested in, there's an opportunity for Sierra chart. Anyone's interested in Sierra chart, that I'm going to be putting out the details too. I'm going to put out a video later today. Had to kind of make a pivot, but I'm gonna put that video out later today, and with the details about this opportunity. So definitely make sure you stay tuned and pay attention to that. If you're in the Discord, you kind of already know about it, but this is kind of just pay attention or stay tuned to the video that's coming out, the next video that's coming out with a really good, exciting opportunity in relation to Sierra chart. All right, so we are open. Go ahead and take this down. The main thing that I'm kind of looking at is that volume gap area, PR -1. If we make it back down there, and then we got our session high above 15,190. Nice supply run at the open to take us to above the overnight high. Immediate supply response mechanically as soon as we cross the high, as soon as we get that lift. a tight little shop area up here between 204 and 216. Nice little back and forth action. Nice little tennis match. Working our budget. Seeing a lot of participation. Like right below 212 or 15. Yeah, I said it right. 15 212. Potentially turned into a look above and fell. Back inside the overnight range. Had a little bit of delta bring us back inside the overnight range. Setting up inventory right here at 184, right above 184. A little bit of strength back to the overnight high, back into A1. Just kind of letting them work this area out here, not being, trying to be maintaining my patience. Still holding the same kind of energy that we had the last couple of weeks. Although it doesn't seem as like it's chopping around as much. It's just, we're just taking advantage of this, all the orders inside of this range. The previous sessions, like the participation has been, increased from what we've seen the past, for most of the year. So, during A and B period, we spent a lot of time working out that participation. Not trying to leave any orders behind. Wholesale still, got their doing what they do. It's the best way I can explain it right now. While I'm trying to, make sure I'm paying attention to my setup. I don't want to get too caught up in trying to explain deeper concepts. Got a lot of participation around the 200 area. Right now, serving as supply. Say the market is showing a lot of liquidity above us, more so than below us. Delta is somewhat showing that participants are paying attention to it. But we're getting a supply response every time we try to, lift that supply. The high of the supply is 206. Way this is printing, it's highly likely that the market is trapping both sides, or both sides are feeling trapped from what we've seen so far. We lifted the supply that gave us a breakout by traditional standards, depending on what time frame we're looking at, of course. But I can see that there are participants that did attempt to take that break from the perspective that I'm looking at, and we brought it right back to the overnight high, came back inside of that shop. So of course, it's not just one side looking at the participation that happened in the area. It wasn't just loans trying to take the break. It could have also been some covering from any loans that got in before that. Could have been some shorts trying to initiate their positions there, or scale into their positions. But we do know that there were a lot of orders that took place in that area, where the response was to bring price back inside of that range. And that's the only way that I try to look at it. I don't try to see, I don't really, this is the way that I look at it. You got to figure out which narrative helps you, perform the best. But I just neutralize it. So I'm not concerned if the orders that I seen, the participation that I see come through, I don't care if it's buyers trying to go long, short. All I know is that there's orders there. And then I can use the, my methodology, my technique or the patterns or whatever that I see the triggers that I've already predetermined to decide if I'm going to also participate in that or if I'm just going to sit back and let it play out.
Just a concept to consider. As I'm listening to you speak, it's coming to me. What happens, or just a concept to consider, what happens when we get to a point to where the game has been going on for so long, and as time moves forward, participation, quote unquote, as a word, becomes more aware? And if that's happening, how do you see that, you know? And then at what point does it get to where, kind of what I'm seeing now, where each participant individually to some degree is met by a party holding awareness? So if it's almost as if you're participating in a exchange where it gets to a point where the other side of the trade is holding the degree of awareness as you would be holding the degree of awareness. But what happens when it can meet, again, each individual participant? And so what I'm witnessing is that to some degree. And I'm watching these participants transact. But when there's not that much liquidity compared to where it used to be, and let's say a few years, So we'll say there was the inception where we're starting to look at this data set. And over the years, this participation is declining, almost like a breath in a way. So as this is declining, there's more defining because there's less. Let's also think of it like a pool. As we describe liquidity as pools, right? So in this pool, over time, liquidity dries up. And as it's drying up, you can see, oh, look at that. You see that? It was there in the pool the whole time, moving around, but now you can see it as the liquidity or the pool's dried up. Anyways, I just hate to interrupt, but I also had to, based off what you were saying, it triggered that thought. But I'm done.
Good stuff. I'm probably have to repost that or repost this stream because I realized that I probably didn't go through. I think the way I got it set up is not, it didn't record that, or it didn't go through for the stream. But it's definitely some good points, good things to be aware of. And I did have to take a moment to kind of look at some discrepancies that I saw on my charts. I think I figured out what it was. But so as we was doing all of that, we have been dropping the inventory deep back inside the overnight range. And to find a nice little mechanical response below the PR low. Somewhat of a volume gap there, but not one that I would give too much attention to. But we are, we are staying mechanical to, my levels of interest are the levels that I have on my chart. So right now, like that supply, we have supply sitting around 151. Still seeing a supply response at 151. I do see participation from the other side. Right at that level. And that's just on a micro scale, so it could be a number of reasons to why I am seeing that participation there. Then what I like to do is I like to have a plan for, whatever's going to happen. So I have my point of execution, and then I already have a plan ahead of time if that plan doesn't work out like I would want it to. And then I have a plan, of course, if it does work out in detail of what I'm going to do. So that brought us down to the low of that value area, the overnight value area, at PR -1. Was a quick inventory response off of PR -1 at 117.5.
And let's have a little bit of fun. It's almost like you're egging me on when you're silent like this. So, well, just a concept to consider too. We're in the days now where all of our data, well, we're just becoming aware of how much of our data has just been being collected over the years. And now we're getting to the point to where machines can crawl through that and quantify interesting things from the data set. And we're in the time now where participants at the CME include Google and Alphabet and capital G. And see, it rhymes when I say it, but that's all true, literally. And if we're in that, we're in this space now, right? And it's meeting us. Well, what happens then if I've got a data set? Well, I'll tell you what happens. It means that I know how you're gonna move before you know how you're gonna move, unless you're holding a degree of awareness to what you're doing these days. This is almost an interesting concept to consider to level up. And for those of, well, really, it's for you then, Rob. For you listening, it's just to meditate. It's gonna click, but this is what I mean. So we're in the time now where we're already, what do they call it? They call it, they've got terms for these damn things where there's replicas, digital replicas of you and me. You know, it can be done with data set. So if we are participating in this game where we've got machines who've got digital replicas of you and me, well, how much of us are really unique beings, aware of what we're doing and how we move when we place a trade? Well, in these days, and it's not really an in these days, what I'm witnessing is how there is conditioning, because we are these digital replicas if we're triggering and moving and not holding the frequency, the responsibility of our movement, the degrees. So it's almost to a challenge of recognizing that our movement literally is mechanical by default. So we're stuck there. So how do you break free of the mechanical movement? You've got to see the frequency, the truth of what you're doing. So why am I being triggered to take this trade here? Is it based upon these lines or this average? Or is it me and what I'm seeing triggering me to make the movement? So this is, again, I'm just expressing this as code, because we're in the time now. We've got to level up, because that's the level we're at now, what I'm describing. That's what I'm seeing in the charts. All right, I'll be quiet.
Trying to think of how I want to respond, because I'm definitely going to have to repost this, so that can be expressed on a more than just for my ears. I think I've said this before, to where, and I got this came to me as I was listening to Market Wizards, and I realized that a lot of what's in people's training for how to participate in this environment, it's like it's almost taken directly out of Market Wizards. And why that's significant, why that was significant to me is it goes to the point to, you hear this fear about being watched by the other side, all right, and how the market is competitive between different participants. So I mean, there's I mean, I'm not gonna get into the whole thing, you know, too deep into like truths and all that stuff, but there is some truth to that, right? So if you have market makers, there's a competitive component to what they do, especially when they work together. And this kind of information came to me by hearing other market makers talk, right? So I'm not just something that not just a theory. This is what I've heard market makers express. So there's competition from that end, and for most retail traders, it's in my belief that you're only competing with yourself, but you're competing also with how you've been taught to participate in this environment. And this is why I give so much focus to trading from within, because if you maintain the truth to the frequency that you hold. Whatever you hold to be truth inside of you, and it can be difficult to find this because you don't know you don't know if you, unless you do a lot of, do the work. It's going to take you time to see what truth you're holding on to that you were given, that you just bought into, and how you, that versus how you would, like just naturally operate. So what you would naturally see. So, and to bring it back to where I was trying to go with this. If, let's just say, a size participant, if they want to trade based off of what you're doing as a retail trader, they don't have to watch your orders. They don't have to watch the books because they already know what you're going to do. Because I've watched a lot of content, a lot of, I've seen courses, and I watched a lot of YouTube influencers on YouTube, Instagram, all over the place, all over the internet. And overall, most people are participating in the same exact way. They just have their own little nuances to it, but it's like, it's a couple ways that most people participate in this environment. And a lot of it is based off of how this environment is introduced to new traders. But you have to go through that to understand how this environment works. But then you got to see, not just rely on that, but also to see what resonates with you outside of what's being taught as the right way and the wrong way to trade in this environment. And a lot of times, for me personally, like to find that what works for me the best, I had to fight against what was taught to me as the right way to trade. Like it was an internal battle that I had to go through, and I really just had to just try stuff out. That's how I got over it, and to see what works for me the best. Just to try different things out, to try things that completely went against what I was told of how to participate. And not, mentorship and all that stuff is good, but at the same time, if you see something, I put it this way. I saw this, I see this on Reddit a lot. I spend a whole lot of time on Reddit, but I see to where people have an idea in their mind, but instead of trying that idea out for themselves, they will go and they try to validate it with other people on Reddit or just other people on the internet. And in my opinion, that's the worst thing you can do, because they're not going to be able to tell you what your edge is. You seeing that for yourself, you're getting closer to your edge if you haven't found your edge already. But going to ask somebody else that doesn't know who you are, doesn't know what makes you tick, doesn't know what you've been taught, doesn't know your history, your background, or anything like that, asking them to validate what you saw for yourself, you're kind of taking yourself away from your edge. I mean, you're not kind of you actually are taking yourself away from your edge, because they don't know what your edge is. Only you will know what your edge is.
Glad that you said all that, because it needs to be said in this time that we're in. That message needs to get out, because for the right people, they need to hear that. Because if you're at a block, that's the code. Those are the codes that you run inside, get answers to, and then you move to where you can move forward. That's it. Those are the codes. That message, that concept.
So as I was going through all of that, we did have a mechanical response off the overnight low, lifting our inventory back towards the PR low. That 151 area, seeing some front run of that by our previous print there, and I can look at it and at the bottom. I can look at that by volume. I can see that that will be an area where I would expect, and on the basis of what we've been talking about, an area where I would expect some new participation to be having their eye on, whether we're trying to take profit there or you're trying to initiate a position there. So knowing that, not even needing to look at the book or anything like that, I just know that that's a high likelihood that there will be participants around 150. So I can take that and I can cover my position if I got in lower before we get there, increasing the chances of my orders being filled the way that I wanted to. And if I want to initiate a short there, I can also take that same information into consideration and front run that area. It also triggers an idea. I got this idea earlier also about indicators. And I got this idea about indicators to express this thing about indicators because I had an indicator on my chart this morning that was kind of printing in a funny way. And it was actually kind of taking my focus away. That's why I haven't really only taken like one trade, and it was for a short little scalp. But I just heard this recently, that indicators are not really helpful, and they don't, it's not something that you can really use to trade off of, and blah, 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 right? We all know the sentiment about indicators, especially from people that are against using indicators. Now, in terms of indicators, I wouldn't necessarily just trade off an indicator. I personally like price action and structure, and then just understanding the psychology and how emotions are used to move price around. But indicators to me are useful in seeing the quantitative side of automated participation. And so what I mean by that, let me say that in a different way. It's a way for me to see how an automated system can be created. Now, I've mentioned this before, but in order for me to create an algorithm or some sort of automated system or AI, whatever term you want to use, it's all the same thing. I need quantitative information. And for trading, the easiest way to get that quantitative information is through an indicator, because the math has already been put together to give this information. So I can start building my own system based off the math. I can start putting my formula together based off of math that has already been done. And then I got so many opportunities because there's a ton of indicators out there, and I can, alchemy my way into a somewhat of a technical edge by just, using the quantitative information that's created by indicators. So as retail, or for me personally, I've been able to recognize some automated systems based off the indicators and kind of manipulating the indicators, doing the same thing, almost reverse engineering it. And I can see where quantitatively there's always a response in a certain way, showing me that someone built a system off of an indicator there. And if you can discover that to me, that is the value of using, or the highest or the most valuable way of using indicators. And the interesting thing about that, even though there are people who are, they have their opposing ideas against, they have their opposing ideas against indicators. People not even understanding indicators on a deep level, people still efficiently use indicators all the time. So again, it goes back to trading from within and trying things out, trusting yourself, trusting your frequency. And then you definitely, I highly would recommend to not try to validate it by someone else's opinion. Validate it by putting the work into it, by trying it out for yourself. Validate your own stuff. Don't ask for someone else to validate it for you. But that's just my opinion. You can do whatever you want to do. So we're still lifting the inventory back inside of our overnight range. We're not done. Facilitating the orders from participants in this range from the wholesale perspective. Haven't really been paying close attention as I've been going through all of that, but it just off of I'm still seeing like mechanical responses to certain areas. With a lot of front running. So we're just taking the stairs back into back into the highs of today's range. We got a point of interest right here, 179. I can say we are front running that. We're looking to see if we make it above that price, above that zone. That front run brought us back to A1, brought us back to previous inventory, or what would be now our season inventory. Supply at that 172 area. There's a potential momentum break that could take us to that 179 area. Somewhat of a strong supply response. Oh, we're stalling right there at 168. By the way that this is printing. Before I even got to say it, it's showing a lot of sell interest here. That's just by the print. So the print can also be misleading. This is why I express it that way, instead of saying that there are sellers here, because just because there is selling, the charts or the order flow is showing sell participation there. Again, it doesn't mean that wholesale is actually trying to find cheaper inventory.
You know, it's funny listening to you speak as I'm witnessing these things go down real time. Maybe if you have a little bit after the stream, we should just narrate maybe 3, maybe 9 minutes, have a little bit of fun.
So that inventory area did hold up, and on that note, going to go ahead and close up my session for today. So I am going to repost this with full audio because I'm sure only one side came out, because what was expressed today I think needs to be heard. So for those that are, that needs to hear it, if that made any sense. So anyway, with all that being said, I appreciate for everybody for coming through. Origin, of course, I always appreciate your participation. And the last thing, to also be on the lookout for the other video that I mentioned at the beginning of the stream. A really good opportunity, exciting opportunity, I believe, that I'm going to be expressing or putting out in the video that I'm going to release later on today. But anyway, with all that being said, hope you have a good rest of your day, good rest of your session, good rest of your week, and until next time, trade it easy.